Los Angeles real estate 2020. ¿Qué pasó? What happened? Well, I'm about to fill you in. So now would be the appropriate time to do as told and hit the like and say hello. Tell me what you think. I'd love some feedback. If not, it's just me talking to myself every week, but thanks for tuning in. 4 things to recap the market in 2020. 1, interest rates continued to decline. 2, prices continued to increase. 3, demand was like survival of the fittest out here. And 4th, mask, glove, peds, sanitizer, all the latest fashion accessories. So let's dig into this a little bit more. I'm sure you've heard this, any of the financial sectors or segments that you're watching. If you're following all the stocks, you've got to see that interest rates have been just plummeting downwards. Obviously, being in this industry 16 years, I've seen an average interest rate around 5.5%, give or take 5%. And they started to decline a couple years ago. But this time last year, January 2020, the interest rates were 3.7. Today, 1 year later, interest rates are 2.7%. The amount of refinances are up over 50%. Homeowners are refinancing and taking advantage of this, which is pumping money back into the mortgage industry. And then first-time buyers or repeat buyers are able to take advantage of this increased affordability due to the interest rates. Now, keep in mind, as I've mentioned before, 1 point interest rate is around an average of $1 million purchase, around $1,000 savings a month. So that's a huge deal. That's $100,000 on a purchase price. The S&P CoreLogic Case-Shiller Home Price Index is the leading measure of U.S. residential real estate prices, tracking changes in the value of residential real estate nationally. While looking at, in that S&P CoreLogic study, looking at Los Angeles Metro, the city of LA, not the county of LA, we had our biggest year-over-year increase in prices since March of 2014, year-over-year increase. So although we've had increases the last 7 years, this was the year-over-year biggest increase, and that was at 8.4%. Now, NAR tracks the median price of homes. This is different from the other average, but the median was up 15%. So remember, median is the middle number. LA itself saw the biggest increase in the US, which was very interesting to see. The condo prices have only increased at half the speed of houses. Why? People don't want to be in community space. They don't want to be sharing elevators and parking garages and gyms, definitely not the gyms. So they are opting to move a little further out of, say, the beach cities or LA proper and get a little bit more space. Now, third is inventory. Inventory continues to shrink. I'll read you a quote here. Amid the strong demands, the inventory of homes for sale has reached the lowest levels in recorded data going back to 1982. In 2020, average for sale inventory was 63% of the 1982 level. And while lower turnover rates since the Great Recession are partial culprit of low for sale inventory, the US has had 2 decades of bleak housing construction since 2000. The US has gained 46 million people and only 20 million housing units. In the 2 decades prior, the country gained 45 million people and 35 million housing units. The imbalance has led to the housing cost increase at a faster rate than income. Since 2000, home prices have increased 1.6 times the rate of real household incomes. And according to the latest CoreLogic Home Price Index that I was discussing, home prices continue to grow at the fastest pace since 2014. What does this all mean? This means we are in a housing crisis, and no matter what happens, we have more people than housing. And the 4th point, as I said, new fashionable accessories, masks, gloves, hand sanitizer. PED forms, which is a property entry disclosure form advisory. Everyone needs to sign one before touring any properties. It was great to see everybody adjust so quickly and make moves. With everything going on in the world, it's like everybody just wanted to get in and see property. So it was a very, very busy year. So that was 2020 in a recap. We're going to look at some of the predictions for 2021 in another video, but it's going to be a lot of the same. 2021 in housing is going to feel like Groundhog's Day. Thank you for checking out this episode. I hope it was helpful. If you have any real estate questions, I am always here to help. Cheers, guys. See you next week.